I actually think it's the 3 or 4 million Bitcoin need capital, NEED, real capital, bold letters, italicized and underlined. We need $30 and $300 Bitcoin to get out of those old. Have to. Until that happens, this market's not going anywhere. It's going to go 90 to 120, 90 to 120. It has to get. Satoshi made a mistake. I think Satoshi made a mistake because you'll see the biggest sell of Bitcoin in the history of mankind. Like, we'll get to $57,000. And it's not right.
Bitcoin is no longer being driven by hype or headlines. It is being quietly absorbed by disciplined capital while most investors are still playing the wrong game. Gary Cardone is a seasoned investor and capital allocator who approaches Bitcoin through an institutional, long-term investment framework rather than a speculative one. He consistently emphasizes that the most common mistake market participants make is confusing trading with investing. Routine liquidations and panic-driven sell-offs are not indicators of Bitcoin weakness, but clear symptoms of excessive leverage, options exposure, and short-term speculation. Within this framework, Bitcoin is positioned as an asset to be accumulated and stored patiently, not actively traded or timed. Cardone highlights that the dominant capital flowing into Bitcoin today is fundamentally different from early crypto-native money. This old money consists of institutions and high-net-worth investors deploying capital methodically, scaling into predefined price ranges and viewing retracements as accumulation opportunities rather than threats. This disciplined approach helps explain why volatility has moderated and why headlines no longer trigger sharp, emotional price reactions. With a market capitalization exceeding $2 trillion, Bitcoin has entered a class of assets that historically do not disappear. Size introduces inertia, and once large asset classes establish momentum, they tend to persist. Institutional adoption, while still in its early stages, continues to expand, with conservative financial institutions permitting modest portfolio allocations that represent meaningful inflows relative to Bitcoin's fixed supply. If Bitcoin is shifting from a trader's market to an investor's asset, is this still early, or already the calm before the next major move? Share your thoughts in the comments, and don't forget to like, subscribe, and share this with anyone still trying to trade what institutions are quietly accumulating. Now let's enjoy the interview.
Yeah. It's the old money that hasn't really come into Bitcoin yet. Like this really, all your friends are crypto-centric. But the money that's coming into Bitcoin is not crypto-centric money. It is old. Now that money is very different. It's coming in methodical. I'm buying at 88 to 92. It waits to hit the 88s and 92s. I've seen my brother buy 3,000 Bitcoin. Just my thought, 88, 90, 88, 90. I hope it goes to 84. I hope this retraces. I am begging for a retracement.
I always hope it goes down.
Freaks people out. Like, you see all these liquidations, and I'm like, why are people getting liquidated over this? Because they're stretching. They're buying options. Like the young man just said here, hey, I'm out of crypto. He got out of crypto because he's trading too many options. He should be out of options, not Bitcoin. Like, don't confuse options and Bitcoin. Like, you're probably going to get your head torn off trading options on the video. So I think all of these.
I don't think people should be trading Bitcoin.
Oh, I agree with that. I think you should store it just like the bloody squirrel. And you're going to wake up several seasons from now being extremely rich, unless you think this is it. It's a $2 trillion asset class, and it's not going to do more. That has never happened to a $2 trillion asset class, ever. It always goes up after $2 trillion. Never, you don't lose $2 trillion asset classes. Never in history has a $2 trillion asset class expired. And we got silver at what? Silver's market cap is
$5 trillion in silver.
$5 trillion. Now that $5 trillion market was $3 trillion 3 months ago. Well, there has never been an asset class at $2 trillion that failed. You get momentum. Once you get, the old rule about inertia, a object in motion tends to stay in motion unless it's, hammered with another force countering it. Clearly, I didn't go to the physics class many times, but the Bitcoin momentum, like, to think that it's going to $57,000, which I would love, that would be awesome. I mean, everybody says it's got to get retested. I don't think it gets retested that low, but it would be an awesome experience to do so. And I think that's the difference between the more serious buyers which I see the people that are coming in here. What did Matt say? You got $1 billion, just $900 million.
Yeah.
I mean, Bank of America just came out and said, we approve all of our advisors to go up to 4. But even that they made that statement, you're talking about the most ultra-conservative bank. Like this is a hyper conservative bank, Bank of America. And 2 years ago, we would have said, hey, Bank of America is approving 1%. We'd have been like, oh my God, that is like nirvana. It's 4. And I've seen banks with allocations that are 20 times higher than that. Like when the analysts go in and do the study and they go, hey, we think the allocation should be 76%. They erase the document, the memo, because they're like, we cannot have anybody seeing this, and they reduce it to 35%. There was a time just a couple of years ago where 1% was going to be, that makes Bitcoin. I mean, I actually think, I'll get a lot of hate for this, but I actually think it's the, 3 or 4 million Bitcoin need capital NEED, real capital, bold letters, italicized and underlined. We need $30 and $300 Bitcoin out of those old. Have to. Until that happens, this market's not going anywhere. It's going to go 90 to 120, 90 to 120. It has to get. Satoshi made a mistake. I think Satoshi made a mistake.
Now you're going to get.
Yeah, but and the mistake was that the issuance of a short-term mistake maybe. The issuance, the way it was pushed into the market, like 12 million coins within the first 6 years or so, 8 years. Don't hold me exactly to that. That's what happened. But they were priced so low. One, we know they were mispriced because 3 or 4 million coins were lost. And when you misprice things, you mishandle them, you mistreat them. Most certainly, that did not get lost at Fidelity, by the way. That got lost in self-custody, and it wasn't respected. And when you don't respect the price, usually it's lost. I do not hear anyone losing $90,000 Bitcoin. Okay, I do not hear that. But this price delta between $30 and $300 and 90,000, it's too big, man. You have 12 million coins that are priced under, they're deep in the money. And there's no incentive for these people, especially with their political mindset. There's not a lot of incentive for them to move into the market. This was my fear about, you guys quit asking for no taxes on Bitcoin because you'll see the biggest sell of Bitcoin in the history of mankind. Like we'll get to $57,000. And it's not right. You don't treat crude oil that way, so don't treat Bitcoin that way. If it's a commodity, it has to get taxed if you tax normal things, if there's truly a tax or a reason for tax. So I just think that we're going through this big gap between $300, $3,000, whatever you call it, and 90, and these old coins just have to come into the market.
Bitcoin is no longer just a speculative asset. It has become a self-directed, scalable business that lets investors convert fiat into hard digital property while bypassing intermediaries and inefficiencies. Gary Cardone reveals that many valuation metrics applied to Bitcoin-adjacent companies, including Strategy's M/NAV premium, are fundamentally flawed. M/NAV, private equity multiples, and similar measures are artificial constructs that fail to justify persistent premiums. Holding large amounts of Bitcoin does not automatically create operational superiority, and Strategy is unlikely to evolve into a trading bank or options desk, as it lacks the institutional culture required for such operations. Any expectation of sophisticated financial intermediary capabilities is misplaced. Gary Cardone reveals that direct Bitcoin ownership provides a simpler and more efficient path to wealth, reducing complexity, stress, and reliance on intermediaries. While Strategy once benefited as a rare institutional gateway prior to ETFs, that advantage has largely disappeared. Even as large pensions allocate to public equities like MSTR, the structural edge favors outright Bitcoin accumulation. Gary Cardone reveals that political contributions offer limited value relative to Bitcoin. Transactions through political channels often result in liquidation and value leakage, highlighting the efficiency of holding Bitcoin independently. Bitcoin functions as a scalable, self-directed business, enabling incremental accumulation, conversion of fiat into digital property, and elimination of legal and administrative friction. Recent acquisitions of Bitcoin by Cardone Capital underscore the convergence of traditional investment strategies with the emerging cryptocurrency landscape, signaling a transformative shift in wealth preservation and capital control. Let's get back to the interview.
The strategy company, this MNAV thing, which I have always been a huge detester of. I think it's the dumbest thing. I think PE multiples are dumb too. I think they're all bull. All these metrics are made up. There's no reason for any of these companies to trade at a premium. I mean, maybe a slight premium for operational, and I could see strategy. Okay, dude, but it's not because he's got 700,000. Just because you have a lot does not mean you're going to be able to do more. I don't get it. He is never going to be a bank. If he is a bank, I'm selling all my strategy. He does not have the culture to be a trading bank, a JP Morgan. All these Bitcoin guys, he's going to turn into an options desk. And no, he's not. He doesn't have the culture for an options desk. You need an Enron for that. You need a JP Morgan, a Morgan Stanley.
I could see
any kind of
lending.
trading, maybe lending, but even that, okay, it's not really the core. It's not his core business. It's not his mindset. I just don't see where the premium comes from. So I look at it back to this conversation. I think all of it was a mistake. I should have just bought Bitcoin. I would have less headaches, less worry, less concern. The cool thing is, the money that went into strategy was never going to go into Bitcoin because the ETFs weren't around then.
Right.
Well, that's come and gone now. He no longer has that edge. I think the edge he does have is large pensions will go into MSTR and they won't go into NACA. They're going to go into MSTR and they're not going to go into BMNR. Well, I've always hated the politics because I think anybody that's a professional politician, they're a professional politician. It has nothing to do with being Republican or blue or independent. Look, I'd never really been involved in politics, but when I saw Trump come on, I knew that I could help the Bitcoin community. And that was why I gave him 12.8. I could have given the money directly to Trump and had a better relationship with him. But I chose to go through the Bitcoin community. One, I wanted to show the Bitcoin community, hey, my allegiance is to Bitcoin and the industry. It's not to this group of people that are trying to do politics. But I thought the leverage and I think it was very useful. I have no regrets over giving the 12.8 Bitcoin. My job was, hey, I got to replace it. And that's my job to replace it. What I saw was that 12.8 Bitcoin, one, got liquidated instantly.
Right.
Two, I'm pretty sure that half of it might have gotten to Trump or less. By the time everybody took their fee in their little MLM, multi-level marketing program, I mean, the amount of people.
Amway. Yeah.
Dude, I looked at it and went, wow, this is awful. So that's the first thing. Second thing is I've given up. I was right before. Professional politicians don't do anything but do professional politician things. I will never give any money to anyone. I'll do the thing with Deaton. I'll provide my house, but I'm not supporting the political process anymore. I'm going to support getting super rich, super fucking obnoxiously, disgustingly wealthy so I can say, and I will say I'm really disappointed in the people that have fuck off money who are not saying fuck off. Like, shame on you, dude. You have fuck you money and you're not saying fuck you. And we need some real men to stand up. We have 3,500 billionaires on this planet, and very few of them are saying shit. Well, maybe you misunderstood me, but for me, that is the business. Like, the show that you're doing, you're going to blow this show up, right? So you're going to put more and more and more energy into it. Once you start doing something successful, you don't stop.
Right.
Okay, I'm successful now. I'm going to stop now. I hear people say that. Hey, you've had a lot of, look, you're up 400%, dude. Why wouldn't I keep playing this game? So my job, Bitcoin is a business. Everyone that I hear says, I want to be in control of my own destiny. I want to be the CEO. I want to be the captain of my ship. All right, buy Bitcoin. It's the only business you can buy 0.1, 1 Bitcoin, 10 Bitcoin, or 100 Bitcoin, and then keep adding. And all you do is just keep adding to. If I said to you, hey, look, you're going to do these podcast shows, and then you're going to go mine gold at between 9 p.m. and 9 a.m., people would be like, wow, he's a superstar. He's got 3 jobs, and we would give you kudos for mining Bitcoin, or for mining gold. All you're doing is mining Bitcoin, really mining fiat and converting it.
Convert to Bitcoin.
Right? I don't, it's just, if it's good for strategy, if it's good for my twin brother, if it's good sitting in a BMNR, it must be good. I call it the Family Bitcoin Reserve, the FBR. It's awesome, dude. If it's good for all these companies, he raised what, $40 billion? Dude, if he can raise $40 billion, how's it not good for me? Like, I don't need strategy. I need to do this on my own. And then I can do some strategy if I want to. But it's really making me question, hey, why do I have any of this stuff in other products, right? I could just have it all in Bitcoin. And all of that's sitting there just because the Bitcoin wasn't ready at the time.
Yeah.
So I just think it's an awesome business because I reduce all human error. I have no legal documents to sign. This is a big problem for me. You call me up and go, hey, I got a deal to give you. I want to show you a deal. And the first thing you have to do is send me an NDA, which, by the way, I don't really understand. Really. You do not, there's a comma. One little comma goes missing, and you're going to argue in a courtroom. So I'm working on a deal right now. The paperwork is like crazy. I can do Bitcoin without any of that noise whatsoever. I don't need a lawyer. I don't need an accountant. I can buy my own Node 40 software for $5,000 a year, and I can run rings around the IRS forever. I'd bury the IRS, okay, with this technology.
Bitcoin's evolution reflects a shift from speculative trading toward structured, long-term accumulation by institutional and high-net-worth investors. The inflow of methodical capital, coupled with reduced volatility and muted headline reactions, underscores the maturation of the market and the growing dominance of patient ownership. Direct Bitcoin acquisition simplifies wealth preservation, bypassing intermediaries, legal complexities, and operational friction inherent in proxy vehicles or political channels. Large market capitalization introduces inertia, making Bitcoin resilient to short-term shocks and establishing a structural foundation for continued accumulation. Early mined coins and institutional allocations create a supply dynamic that favors steady, disciplined entry rather than opportunistic trading. The convergence of traditional investment frameworks with digital asset accumulation, exemplified by strategic purchases, highlights Bitcoin's capacity as a self-directed, scalable financial asset that enables incremental accumulation, fiat conversion into secure digital property, and efficient control over capital, positioning it as a central instrument in modern portfolio strategy and long-term wealth management. Would you rather hold Bitcoin directly for the long term or invest through companies like MicroStrategy? Share your thoughts in the comments, and don't forget to like, share, and subscribe for more insights on Bitcoin and smart investing.